Welcome back to the Legacy Radio Network. I'm Dennis Tubbergen, your host, and you're listening to the Everything Financial Radio Show. We are chatting today with best-selling author Bob Wiedemer, author of Aftershock. Bob, also in his book, I believe released back in 2006, you can correct me, Bob, if I am incorrect, America's Bubble Economy.
That's correct. Mm-hmm.
In which he accurately predicted the bubble bursting that we saw in 2008 and 2009. And Bob, prior to the break, we were talking about inflation. And to paraphrase, and again, you can correct me if I am wrong, you'd said that, it's the fool in the shower theory. At first the water's cold, but then all of a sudden the hot water hits. And a lot of the money printing, if you will, the quantitative easing that the Fed has done to buy bonds, and they're talking about doing more of that. It's your view, then, that will lead to inflation. And can you reconcile that view with the fact that we've seen housing prices certainly deflate, we've seen credit contract, and we've seen wages decline?
Well, and it's interesting you point to all three of those because in terms of housing, you're going to get housing can decline in prices. That's an asset price decline, not necessarily inflation. Wages are a different matter. Wages have declined. That's certainly part of what's kept inflation from growing faster. That said, we still have seen higher inflation than we saw a couple of years ago. I think we all feel that in our pocket. And it's not clear that the CPI is accurately reflecting just how high our inflation is. But there's no doubt that inflation remains muted from, say, what we saw in the late 70s and early 80s, and I think will likely remain so for a while. But I think that the idea that you'll never get inflation is a bit like the money from heaven theory that we use on government borrowing. Right now, we just borrow $1 trillion a year, $300 billion a year, and we really never think we're going to pay it back. Honestly, do you ever see a payment plan or any even thought of that? And that's what's happening right now. We're printing money, and we just assume it'll never create inflation. And I'd say on both, if you really think that's true, heck, I've got the plan for you to really turn this economy around. Just print another $2 trillion. Just kick out that deficit another $1 trillion. And you know what? This economy will start flying. And I might add, that's really why this economy is already flying. If you didn't have that increase in government borrowing, you'd have negative GDP at this point. You'd have no GDP growth. And if you didn't have that printing, I don't think you'd see much action on the stock market either. I think it would have spiraled down. So those are very important. They're what's driving things now. And don't let me kid you. If you double each of those, you'll get this economy moving even faster. It's just what I'm saying is it's not money from heaven. That debt will blow up in your face. And yes, printing money eventually causes inflation, even if it doesn't cause it right away. If it didn't, heck, I'd be the one supporting it. Why don't we just print, 5 trillion, 10 trillion, and buy everybody's house, give everybody $1 million to spend. I mean, if it's that easy and it never creates inflation, let's do it.
Yeah, so Bob, based on that statement, it certainly makes sense. I think it was the economist Herbert Stein that said, if something cannot go on forever, it will stop.
Exactly.
Very profound statement. What's your position on gold? Where do you see gold prices going?
Well, gold's been a real nice, steady play. It's overlooked as being kind of a volatile commodity, and it certainly has some volatility, although if you really look at it, it's closed out every year for the last now 11 years up. So it's been a pretty solid bull market, up almost to over 500% now. I think we'll continue. We've already seen gold up this year about 16%. Gold was up last year about 10%, even with the big decline in the fourth quarter. Still closed out 10%. Up 16% already this year. Could we maintain that 15%, 16% through the end of the year? My guess is yes. So I would still look for gold to stay up this year, 10 to 15%. Might go even higher, given it's already hit that by mid-February. And I think longer term, I think it's going to be a great run because I think there's a lot of people in the U.S., but much more importantly, people in China, India, who will be increasingly afraid of inflation and will, buy increasing amounts of gold. Same in the Middle East. Again, just like any commodity, it will certainly go up and down. But I think the long term for the next few years, as I see it, is pretty good. And if you ever start to see, and I think we will, some significant inflation, not just here in the U.S., but, ECB is printing money in Europe. Bank of Japan's printing a lot of money. China's printing a lot of money. And if you start to see more inflation around the world, I think there's going to be greater worldwide demand for gold longer term.
Yeah, and I think I'd read a statistic this week that if you take the world's 6 largest central banks, that their balance sheets from 2006 have expanded from about $5 trillion to $13 trillion. So that's certainly a lot of money printing.
Exactly, and that's an important point. Is it's not just the U.S. They don't want to think the U.S. is the only country who wants to print money. I mean, this is an easy out found by a lot of politicians around the world, and everybody's kind of joining the game right now.
Bob, we've got about 3 minutes left, and I think our listeners, and certainly I, would be interested in what your opinion is as to the end game. I mean, eventually debt has to be dealt with, so how does all this play out in your view?
Well, you can either, make your own decisions, just like an individual or a business. You can make your own decision to sort of change your ways, and even if what you're doing now is easy, and you sort of know maybe in the long run it's not good, whether it, being maybe a smoking habit or a business that has too high cost structure. But a lot of people don't. And the end game for a business that doesn't cut its costs and get its revenues up is bankruptcy, which happened to basically the greatest company in the world, General Motors. That they did it. They decided the end game was to let bankruptcy force them to change. And with the help of the U.S. government, I might add. I guess they would have changed even faster probably without it. But a smoker might be the same way. He'll smoke until maybe something horrible happens to him, and he then tries to change, but it may be too late. I'm afraid what's happening now is we're kind of going down that same road. Is right now the idea of a little bit of pain seems very palatable for a lot of people, not just in the U.S., but I'm seeing that around the world. And I think they're going to print money. I think they're going to keep borrowing until the markets force a change, and that would be in the form of bond markets that have trouble, inflation that starts to be very damaging to the economy. But then I'd add, kind of like the smoker who's trying to quit a little too late, it's too late. You're still going to have a lot of problems then. So you're forced to change because basically the old ways are blowing up through, through horrible bond markets for the government, as we've seen even already in countries like Spain and Italy. Yes, saved by money printing short term, but I'm telling you that money is not money from heaven. It will eventually cause inflation, and that will be another thing that will force the changes. It's just high inflation starts to beat up on your economy terribly, and we'll be forced to change. I'm not sure I guess bottom line, I'm not sure we will change on our own volition, just like we've seen with, individuals or companies. They don't change until they're forced to.
Bob, sure appreciate you being on the show today. If someone wanted to get more information about your work or go pick up Aftershock, tell them how they would learn more.
Sure. Aftershock's available on Kindle. It's available at Amazon. Actually available in Chinese, Japanese, and Korean, if that's of any interest. And I would also say that if you want more information in the book, go to AftershocKeconomy.com. AftershocKeconomy.com has some of our writings. You get a 2-month free trial to our newsletters. I have some of our writings on the website. Absolute-IM, our money management firm, also has some of our newsletters available on the site, absolute-im.com. So all of that's a good way to learn more about what we're talking about, and we will have another book coming out late this summer on Aftershock investing.
Thank you, Bob Wiedemer, for being with us today. Everything Financial Radio returns after these words.